Hi everyone. By now you probably already know that mortgage interest rate is record low. People are buying houses, refinancing, cashing out from their assets. So I'm not going to talk about that today. What I'm going to talk about is the next question that many people ask. How much do I need to pay for the down payment? Hello?
How much do I need to pay for down payment?
Hey, I see your listings. How much do I have to pay for down payment?
The exciting news is you can pay as low as 3% for your down payment. But are you qualified? That's the question that I cannot answer, nor the seller. That's the question you need to ask a loan officer at the bank. This is Michael Goldberg, a loan officer from Freedom Mortgage Bank. I had an interview with him to answer all the questions I had been asked from my client over the years. This is a complicated topic.
It could be a lengthy process sometimes, and it could be stressful.
I'll try to make this as simple as possible. Hopefully by the end of the video, you'll be able to answer the question by yourself. This is the first video of a 3-episode series of how to apply a mortgage. We'll talk about the important things you need to know, like what to do, what not to do during the process of applying a loan. Hopefully those information can help you to make this process a little bit easier and clear. Okay, so let's talk to Michael. But before we go, please click like button and subscribe so more people can see the video and you'll get notification when new video uploaded. So you click? Okay, let's go. So there are many types of loans.
There are a lot of different types. There's a lot. There's
Just
FHA, conventional.
like top 5 or top
there's
6.
VA loans.
Where should we start?
99% of the mortgages that you're going to see are going to be either FHA or conventional.
Okay, that's better. Let's narrow down a little bit. 99% of mortgage are either FHA or conventional. So let's talk about this too then. First, let's look at FHA loan. So we're going to cover what is FHA, what is the down payment requirement, who can apply, what is the debt to income ratio, and what is the credit score. Hopefully by the end of this session, you'll be able to identify if you are within this category. What is FHA? FHA loan.
So an FHA loan is a government insured loan. FHA requires only 3.5%. It's a great way for people with limited funds.
So who can apply? What's the qualification for people to apply FHA loan?
Sure. So we're going to look at an FHA loan similar to how you would look at any loan, right? You look at their credit, their income, their assets. As long as they're employed and they meet the credit criteria, then you can apply for it. Most people think that you have to be a first-time home buyer to apply for an FHA, but that's not necessarily the case. The truth is that the house has to be a primary residence. It has to be an owner-occupied home in order to be an FHA loan. It's all relative. We're going to take a look at what their income is versus what their mortgage debt, their housing payment, plus their other debt. So their credit card, their car payments, things like that. All that is built into what's called a debt to income ratio, and that's the main calculation of how a bank assesses if someone's approved or not.
So what's the ratio? Can you tell me?
For FHA, for FHA, the maximum housing ratio is 46.9%.
46.9%.
0.9%. So that means your mortgage, your mortgage, your principal, interest, your taxes, insurance, which is what's called your housing payment, cannot exceed 46.9% of your monthly income.
100.
Let's say you make $10,000 a month.
Okay.
Your mortgage payment can't be over $4,700.
Okay.
There's another debt to income ratio that the bank uses. It's your housing payment plus your other debt. So it's that mortgage, the principal, interest, taxes, insurance, plus the credit card, plus your car payments, your student loans, things like that. You add that all together. All right, that cannot exceed 56.9%.
Okay.
So there's room for other debt other than your mortgage. There's a little bit more wiggle room for FHA.
A little bit more, I'm sorry, what?
Wiggle room. There's some, you
How
can
do you say
qualify. Wiggle room? That's what it means. FHA will allow you to do minimum down payments on multifamilies, where in most cases conventional will not. So you have more flexibility. FHA also allows for a lower credit score and for a higher debt to income ratio. So there's a little bit more flexibility, and there are some other small differences, but those are the main ones.
Okay, now let's talk about conventional loan. So what is conventional loan?
Sure. The main difference between conventional and FHA mortgages is the down payment requirements. FHA will allow you to do minimum down payments on multifamilies, where in most cases conventional will not. Conventional, you're gonna have a lower debt to income ratio. 50 is the maximum.
50 is the max.
Yeah.
That's including every
That's
loan,
including
every debt.
That's including all your debt, correct?
Okay, you cannot exceed this.
Yeah.
Okay.
Comparatively to your income.
So how to apply conventional loan?
So you're applying the same way, right? You're going to submit pretty much the same documents, right? You're going to submit your income documents, your W-2s, your pay stubs, your tax returns, right, over the last 2 years. You're also going to, we're going to have to run a tri-merge credit report to see all of your accounts and your assets, including your bank statements, your 401k, or anything like any other assets that you might have.
So it's last 2 years, all the paperwork for last 2 years.
So that's the main paper. Those are the main items that the bank is going to review when you're doing a pre-approval.
So how much down payment for conventional loan?
Conventional really depends on how many units, right? So for conventional, on single families, you can go as little as 3% down.
3%.
But there is some requirement. So you have to be a first-time home buyer.
Okay.
For the 3% down payment. It has to be a single family. So multifamily, it's less flexibility. So that's why you see most people that are buying multifamily in New York tend to go FHA because most of the requirements are higher, like it's typically 20% down.
20% for multifamily.
For multifamily. So that's why you see people, geared towards an FHA mortgage on a multifamily because it requires only a 3.5% down, even though it's a 2 to 4 family.
What if they're not first-time home buyer like me?
5%.
Oh, 5%?
Yeah, on single family.
Single family,
Yeah,
5%?
it will go to 5%.
No, 5%. So we can buy a house for 5%.
Yeah, but it's an owner-occupied. It has to be primary residence. Yeah.
Oh, has to be. Oh, it's not
Primary.
resident.
No, totally different. These are all owner-occupied properties.
We'll make an apartment for your dogs. Owner occupied.
So what's the credit score required?
For conventional, 620.
620. I have an 800. Can I have more benefit?
Conventional is definitely the higher credit score in most mortgages, but conventional in particular, it's sensitive to it. The higher your credit score, the better your rate's going to be. The seller's concession.
The buyer's loan also including closing costs. How does that work?
So you're referring to what's called a seller's concession. You could actually do a seller's concession on both a conventional and an FHA mortgage. And that really is when the seller agrees to increase your purchase price in order for the borrower to finance their closing cost.
Let's say the listing price is 600 and then seller can increase to like 630.
Yeah.
$630,000.
Yeah.
So then they apply the loan as a 630.
Sure. The down payment would be based on $630,000 now, but 5%, the $30,000 would be financed into the loan. If you have a $600,000 loan, right, and the closing costs are $30,000, right, your new purchase price is $630,000, and the down payment is now based on $630,000. So it would be 3.5% of $630,000.
I hope this video can help you to clarify some of the questions you may have. In the next video, we're going to talk about different lenders and the process of applying a loan and what to do and not to do during the process. So, see you next video.